Hello and welcome everybody, it's Stephen and I'm a popular investor on the eToro platform. First of all, I'd like to thank you all for tuning in, and as usual, if you could please like this video and subscribe to my channel and tell a friend, that'll be really good to help spread the reach of my channel and get some more subscribers. So today I'm going to be doing what I hope is a really interesting video for you all, and that is to talk about how the markets fared last week and also a bit more about how our portfolio performed as well. So without further ado, today I'm wearing a 𝗃𝗶𝗀𝗀𝗀 t-shirt. Yes, that's right, a 𝗃𝗶𝗀𝗀𝗀𝗀 t-shirt, and I'm doing that really in dedication to this strong bull market in crypto that we've had the last few weeks. And this has been really good after we had a bit of a dip in May and June, in which the crypto market pulled back fairly significantly. And since then, in August and now early September, we have seen a big rebound in the markets overall, which has been very good for our portfolio. So the 𝗃𝗶𝗀𝗀𝗀𝗀 pays homage to what's happening in the market right now. So if we take a look at how the indices performed last week, the Nasdaq performed really well again last week, and it was actually up about 1.5% for the week. And again, we have continued to see all-time high after all-time high in the Nasdaq. In the S&P 500, we saw an increase of 0.5%, which was a fairly strong week as well for the S&P 500. If I also compare how our portfolio fared to Bitcoin, Bitcoin was up about 4% in total last week, and has actually managed to reclaim that $50,000 psychological mark. And our portfolio, it's nice to say, that was actually up about 5.5% for last week. So it's actually outperformed all of those major benchmarks I was mentioning above. So I'm really pleased with how our portfolio is faring in September as a whole, and it started off really strongly, and it's actually up about close to 4% up for September. And our portfolio for year to date for 2021 is actually up over 139% for the year. And that is a really great and tremendous result. And really what I'm hoping is I can continue to provide really strong gains to you as copy traders moving forward for the remainder of 2021 and beyond. But I'm really pleased with the way that it's going so far. And it's also very promising to know as well that more and more of you are in profit with your copies. I think it currently stands at about 85% of all my copiers are in profit at the moment. And we're getting closer to my portfolio all-time highs. And I think that this is really good. And I think for the people that were, patient in July and August, I think this is really starting to pay off for them. So well done for your conviction and staying strong and keeping a long-term mindset. So as we move on to what happened in the US last week, and I think it was dominated by two main factors. So one of those was to do with the Delta variant of COVID-19, and there had been an increase in cases in the US last week of the Delta variant, and also a rise in hospitalization and death rates. The US are making good progress in terms of the vaccination results, but you saw a particular high number of cases in states that don't have as high of an uptake of COVID-19 vaccinations in that particular state. So I think overall in the US, there's about 63% overall of the population in the US has been vaccinated with the first jab of the vaccination. And I think just over 50% has been fully immunized. And I think that this number needs to continue to increase for them to make dramatic progress on COVID-19, and especially looking at reducing those hospitalizations and death rates. This increase in Delta variant cases as well is quite likely, in my opinion, to delay some of the tapering measures that I think beforehand that the Federal Reserve were thinking of putting in place. And I think that it's going to slightly stunt the growth of the economy over the next couple of months. So I think that asset purchases are likely to continue throughout the rest of 2021. However, I do think that this is a bump in the road, and obviously with something like COVID-19 and the fact that there's more and more strains and the COVID-19 is mutating over time, I think it's likely that we're going to see some of these flare-ups from time to time hit us. But I do think the higher number of vaccinations that we actually have in the general populace, this will help to reduce those death rates and also those hospitalizations, and allow us to go back to a little bit more of normal activities, although that new normal has changed somewhat for most people. The second big factor which drove sentiment in the market last week was to do with the data that was released at the end of last week with regard to payrolls and payroll numbers. So overall, non-farm payrolls actually increased by about 235,000. And although this was slightly below consensus estimates, it was actually still a pandemic era high. And it actually shows that more and more people in the US are actually in the workplace. And actually, I'm expecting those numbers to increase even more as kids start to go back to school in the US and some of the parents can go back to work. We also saw a 15th consecutive month of manufacturing activity growth in the US. And although this period covers the pandemic era period, it's also a very good sign because it shows that more manufacturing is happening in the US and more projects are happening and on the go, and this should be good for future growth in the US. We also saw some good data in regards to Wall Street analysts and their expectations for the next quarter earnings and those results in earnings season, which were expected to be released in October this year. And what they've actually shown is that the increase in the estimates of these Wall Street analysts has actually increased by about 3.9% from July and August onwards. So this shows that overall the sentiment is very bullish for Wall Street analysts, and they're expecting the economy and these companies to thrive. As we move over to Europe now, the indexes in Europe were pretty flat overall for the week. And I think a lot of this was to do with an expectation of a slight economic slowdown in Europe overall. And I think if we look at the COVID-19 cases in Europe and the UK, we actually saw that the numbers of cases had kind of started to stabilize in Europe. However, we're seeing a slight increase in the number of hospitalizations and death rates. And I think maybe some of this is to do with some of the efficacy of the vaccination starting to wear off, which is probably a reason why the UK in particular are starting to think about administering booster shots. And we had seen this previously in Israel, who were one of the first countries to have a high number of vaccination rates. After the number of cases in the US has increased last week, it has actually caused the European Council to actually remove US from the safe list of countries that are able to visit European countries without having to go through any type of quarantine. And I guess that this will be reviewed over time. And there are loopholes around this in regards to those that are vaccinated and those that are able to take a test. But overall, they have been removed from the safe list. Also saw some data with regard to inflation numbers in Europe overall, and it was a lot higher than had been expected. So inflation read at about 3% overall in August. And if we compare that to July, which was at about 2.2%, we are clearly seeing an increase in inflation overall. And a lot of this could be to do with the supply bottlenecks in regard to the supply chain problems that we've been having over the last few months overall in Europe. And if we compare this to the ECB's target as well in terms of inflation, their target has always been around 2%. So we are much higher than their overall target. And some of the key policymakers are actually calling for a slowdown in the pandemic emergency purchasing program that was put in place in order to stimulate the economy during COVID-19. As we move over to China now, Chinese stocks again had a really great week last week, and we are starting to see some really good rebounding over the last couple of weeks of Chinese stocks after a very difficult July and August in the Chinese stock market. So overall, there seems to be a little bit of a reduction in the pressure from the Chinese government with regard to Chinese tech stocks. And we're actually starting to see Chinese companies actually start to play ball with the Chinese government. Delta variant cases in China have also been kept under firm control as well, after stringent measures were put in place in July and August in China. And we've seen a real drop-off in the number of cases in China. So this has been really good for some of the pandemic bounce back plays. And what we have seen is companies last week such as Alibaba have actually pledged to give away about $15.5 billion worth of money away to causes that help the overall government's common prosperity theme that they have been very focused on over the last couple of months. So this is clearly a play from Alibaba, and we will also probably see this for other large Chinese companies, especially in the tech sector, where they try and support the government to try and earn some brownie points moving forward. So I think that this is a good sign to show that there is some alignment between the governments and the large companies in China. We also saw a good bounce back in terms of 𝗁𝗂𝗃𝗀𝗃, which is our casino group, which is based in Macau. And I'm expecting to see, as the number of Delta variant cases continues to reduce, and we have a longer period of sustained time with few cases of the Delta variant in China, that we could see some of those stringent restrictions on mainland visitors visiting casinos in Macau drop off over the next couple of months, and it made easier for them to travel, visit and spend money in Macau. So I'm expecting that, as it's at a very low share price right now, and to me it's very undervalued, that it will have some strong growth in the months ahead. China also announced a new stock exchange in China, which is going to focus primarily on small and medium-sized companies. And this had been a strong focus for a long time from the Chinese government. Another point that supports this as well is the People's Bank of China actually announced they were going to provide 300 billion renminbi worth of credit and loans to small and medium-sized enterprises in China, which further enforces this rhetoric that they want to really help to grow in terms of the common prosperity theme, the small and medium enterprises in China. However, in terms of the PMI numbers, we started to see for the first time some of those effects of June and July high cases of the Delta variant in terms of how it's affected the PMI overall. So the PMI was the reading was at about 47.5%. Which was actually down from 52.5%. So it shows that there were some effects from the Delta variant increases in the country and some of those stringent lockdowns. As we move on to the top 3 performing stocks of last week, in number 1 was, again, which I've already mentioned already, was 𝗁𝗁, our hot pot restaurant in China. And that actually produced a gain of about 11% overall last week. And I've already mentioned the reasons why I think that that's going to continue to grow from strength to strength over the next couple of months. The second best performing stock last week was a company called Everbridge, which does emergency crisis communications and is a company that services many of the top blue chip companies throughout the US and throughout the world as well. And they did really well last week as well, and actually produced a gain of about 9.5% in our portfolio. Third best performing stock in our portfolio last week was the Fosun Group, and that actually produced a gain of about 8.9% in our portfolio last week. And Fosun Group is a conglomerate company in China which has a host of a number of different businesses in different sectors overall in China, including pharmaceuticals, hospitality, leisure, and they even own a football team in the UK called Wolverhampton Wanderers. So overall, they've seen a big gain this week, and I think they are a big beneficiary from the bounce back in the Chinese economy, because they are a good gauge of the Chinese economy because they are very well diversified. We also added 2 new stocks to our portfolio this week, and one of those was Micron Technologies. And Micron Technologies had gone on a massive surge towards the end of 2020. And there was a lot of bullish sentiment overall for this stock, and it was a very favored stock by the analysts. However, that seems to have turned a little bit over the last few months, and there has been some downgrades overall in the overall analysts' price estimates, and there had been some fears that some of the growth overall for Micron Technology was starting to fade. One of the concerns they have is that the DRAM prices could overall reduce as the demand for PC computers decreases over the next couple of months. However, I think that these fears are completely overdone, and I think if we take a long-term perspective overall for a stock of this quality of Micron Technologies, I think that is going to have good long-term growth. And I think after a reduction in the price over the last couple of months, I think that we are getting in at a good time. However, if it does further reduce in price over the next few weeks or few months, then I will continue to add to this position because it is something that I'm very bullish on. Another stock that I've added to our portfolio as well is Stanley Black & Decker. You will know them as the company that provides drilling equipment for your everyday DIY needs. And what a lot of people don't know is that although this stock may seem like a really boring stock, it is incredibly stable and has actually produced over 50 years consecutive dividend growth. So this is really a dividend aristocrat stock, and I think that it will be really good integral part of our portfolio moving forward. However, I have sized it appropriately to begin with, so if there is any further weakness, I will add to this position overall. I took profits this week on my Netflix position, and we managed to get a good gain of 23% on our overall Netflix position. And the reason why I did this was mainly because I wanted to stay disciplined to our overall strategy of taking profits when things were at all-time highs. I also had a little bit concern in terms of the short and medium term that there was increased competition in the streaming space from a number of different companies. And I also thought that new growth was going to be difficult to come by to justify a much higher share price in the short term. Although I am very bullish on it actually long term. So I think that this was a good point in order to take profit. So let's move on to crypto now. And crypto had a good week last week overall, and is really building on those strong gains that were built overall in August. And we have seen Bitcoin hit that key psychological mark at 50,000. And at the time of this video, Bitcoin is at about 51,000 per coin. So really are starting to build some strong momentum. But what is really pleasing is the on-chain metrics are also looking very promising. We have also seen a reduction of the number of Bitcoins that are on exchanges and have been moved into private wallets of about 17,400 Bitcoin has actually been reduced from exchanges and moved into private wallets. So this is always a really good sign in on-chain metrics, because it means when those coins are in private wallets, they're much less likely to be sold. We have also continued to see a bounce back overall in the hash rate of Bitcoin mining. Obviously, in May, we saw a big drop off in the hash rate as China banned crypto mining. And it took quite a long time for a lot of that mining equipment to be set up and migrated into other countries, but also for new mining equipment to be bought, because there is strong waiting list. However, that hash rate is increasing again, and this is a really good sign for the health of Bitcoin mining and the Bitcoin network. We see 3 unique clusters of on-chain volume for Bitcoin, and it actually shows that over 15% of Bitcoin move between the $32,000 range to the $40,000 range. The 9.6% of Bitcoin volume actually moved between the 46 to 50,000 range, and 7% of volume moved between 54,000 to 60,000. This shows that the majority of participants are actually in profit, and it shows that from just over the 50,000 mark, if we break that really solidly for a period of time, that there's nothing really but thin air up to about $55,000. Generally, what we're seeing, as I mentioned, is we're seeing Bitcoin actually move off exchanges into private wallets, but we're actually seeing stable coins move onto exchanges, which is generally also a bullish sign, because it means that over time, people are going to use those stable coins to either buy Bitcoin or to buy other altcoins overall in the market, because obviously the exchange is the best place to do that. So that is a very bullish sign for Bitcoin and also for crypto in general over the next couple of months. Ethereum has also had a great week this week and has actually done phenomenally well, and has actually increased by over 21% over the last 7 days. And I think that this is a massive beneficiary of the NFT and also the DeFi mania that is actually going on at the moment, which all operates on the Ethereum blockchain. What we are also seeing is a risk on attitude in regards to the crypto markets. And this generally happens after a period of an increase in the crypto markets, in where people start to seek out more explosive growth. And that is where a lot of the different altcoins come in, especially kind of the mid to the small cap altcoins, because people perceive that there is much higher growth potential in some of these altcoins. And I think we have been seeing that a lot over the last 1 to 2 weeks. And it's a trend that I expect to continue to happen, especially over the next few weeks to a couple of months, where we see an increase in these altcoin prices, and they could be a lot faster than the increases overall in Bitcoin. Generally, I think our crypto portfolio is in a really good place, and I think that we will benefit from having Bitcoin as the largest weighting overall in our portfolio, as I expect that to test all-time highs in the near future, and then look to kind of extend beyond that and look to hit towards 100,000 towards the end of 2021. But I also expect our altcoins in smaller percentages in our portfolio to produce really strong growth, because I choose altcoins that I believe in and I understand the project moving forward. And I think that there is a lot of interest around these altcoins and a lot of different use cases such as DeFi, NFTs, as I mentioned. So I'm expecting for there to be a lot of media coverage to happen over the next couple of months, but a lot of strong interest in the market. So we are in a very good place with our portfolio. I also appeared last week for the second time in the Copytraders Club lounge, hosted by Gavin McCauley, in which I had a discussion with Brian G, who's a popular YouTuber on the copy trading YouTube channel, as well as 𝗱𝗏𝗀𝗀𝗀𝗀, who is a popular investor on eToro, and we discussed a number of really interesting subjects. We talked about how you can beat the market overall through copy trading. We also talked a little bit about editor's choice and notifications for popular investors and how that is handled by eToro. And we also talked about kind of short-termism and how to, benefit from short-term trades overall on eToro. So this is a really interesting podcast and is something that I would recommend that you subscribe to because I think it's a great resource for copy traders overall. So please spread the word on that, and please watch that latest episode for some really interesting subject areas. Thank you very much for listening to this video again. As usual, if you have any questions, then please feel free to reach out to me. I'm always happy to answer those questions when you have them. And as usual, I wish you a great week ahead. The market is closed today on Monday, but it will reopen again on Tuesday. Until then, have a great week ahead.